Before moving into trading with real money, it's highly recommended to start with a practice account. You may ask, but why? We've backtested a strategy which is projected to be 70% win rate. Why wouldn't we go out and just trade it? Well, we have backtested this on historical data, but we haven't watched a trade setup form in real time. We need to get used to the time it takes for the setup to form and to reinforce our discipline to wait for the correct setup to complete before we try and enter a trade. A practice account allows us to mimic live trading without actually putting any of our funds on the line. We'll be able to do trade setups, enter trades, and see the resulting profits and losses. There are two methods we can use for practice accounts: TradingView's built-in paper trading platform, or we can use a broker's demo account. Let's look at TradingView's paper trading platform. Jumping back into TradingView, if we look at this menu of 5 items at the bottom, on the right we have Trading Panel. We want to open that up, and here we get a list of brokers that are recommended to us. On the far left we have Paper Trading by TradingView. So all we need to do is click Connect on here. Here it says paper trading, also known as simulated trading, lets you practice buying and selling securities. Technically, it's the same as real trading, but with no risk of losing money. Our system tracks your orders and you can see how much profit or loss you have in your account and evaluate how good you are at trading. That is exactly what we want. So let's click Connect, and we don't need to enter any credentials, any login or password, because it is directly tied to our TradingView account. Now, the first thing we want to do is relay back to our trading plan. What did we put as our practice account and starter account balance? I'm pretty sure it wouldn't have been $100,000, which is what this defaults to. So we don't want to get a false sense of making extreme profits by winning a couple of trades and being several $1,000s up. We want it to be more realistic to our financial situation. So if we go to the menu which says paper trading, we can do reset paper trading account. If we open that, let's change this $100,000 to $500. When we hit reset, we can see our account balance and equity have updated as well. Brilliant. Going back to this menu, we have options for commission, which some brokers may take in live trading. But if we go to trading settings, we get a whole lot of settings here. I like to point out to everyone, positions, profit and loss in, you can choose money, pips, or percent. Using a percentage here will bring some consistency no matter what our account balance is. If we're starting on a $500 account, we're naturally not going to feel as concerned if we're $1 down or $2 down as we would if we were on a $500,000 account and we were $1,000 or $2,000 down. Using a percentage here will bring some consistency no matter what our account balance is. Let's hit OK and look through what else we have. There is also an option for how to use paper trading. Now that's going to give you a walkthrough for if there's anything else you're uncertain of, and will tell you exactly how it all works. We can choose what we see in our summary up on the right here, and we can also export our data if we want to take it into a spreadsheet. Now we also have these 5 tabs: open positions, open orders, historical orders, account history, and our trading journal. This will all start to fill up as we begin to place some trades. Paper trading by TradingView is brilliant. They've done an amazing job and the simulated trading works flawlessly. There is just one thing I'm missing though: margin. Now, understandably, every broker deals with margin in a different way, so it's not necessarily up to TradingView to implement it, but you just miss out on that little bit of realism. With a broker, we utilize leverage, which allows us to trade with funds significantly higher than our actual cash balance in our account. So margin is the amount of money we need to keep on hand in order to pay back this in case we lose all of the trades. There are specific margin requirements, and that's what's going to limit the number of concurrent trades we can have. Paper trading is brilliant for getting used to the actual trading and seeing them go in real time, but if you're overcapitalizing and placing too many trades at once, you'll be in for a bit of a shock when we start going live.